Hello, I'm sorry about the break. Very, very sorry about the break. Hello, hello, can you hear me? Yeah, so sorry about the break.
It,
So sorry about the break.
Sorry, network.
Yeah, so sorry about it. Okay, so I was saying, cryptocurrency. Uh, so within this short period of this introductory class, I'll be mentioning Bitcoin and Altcoin often. So Bitcoin is actually Bitcoin, and Altcoin is categorized with every other crypto asset or crypto token that is not Bitcoin in particular. So a cryptocurrency is a digital asset designed to work as a medium of exchange, wherein individuals' coin ownership records are stored in a ledger existing in a form of computerized database using strong cryptography to secure transactions. Record it to control creation of additional coins and to verify the transfer of coin ownership. So this is actually just it's telling you that cryptocurrencies generally they are digital assets. They are not tangible assets. They cannot be physically felt. They are assets that are just for digital purpose. They can be transferred from one person or one party or one individual to another party, another individual, just on on a digital aspect. It's not something that is transferable physically. Yeah, physically, but not a physical medium of transfer. It's actually also uh, goes a long way to only support just a digital means of exchanging between one party to another. Mm. If you're one party to another, please you're welcome, sir. And you're not late to same. We're still almost close to where we are. Um, Bitcoin employs the use of cryptography for its security, and cryptography is a field of computer science and mathematics that focuses on techniques for secured communication between two parties. This is based on methods like encryption, decryption, signing, generating of pseudo codes or pseudo random numbers, and so on and so forth. So Bitcoin actually employs a security means called cryptography. And I've not ever seen or heard in the world or in the internet world, or even the anonymous world or so, or the hacking world, I've not heard or seen or discovered uh, a hacker or an individual, or a technologist, or an IT guru that can decrypt uh, value or documents, files that have been secured using cryptography. So definitely, since cryptocurrencies adopt this means of using cryptography as a security, then definitely your assets, your token that is being owned or is being traded on as 100% safe as the case may be. So it's also brought in the name cryptocurrency cryptography. So since the technology for security that is being used to secure Bitcoin or crypto assets is cryptography. So that was brought in the name called cryptocurrency. We move and talking more about this cryptography I talked about, since I've just given a quick description of what it is, it actually has these four grounded principles which why it works with confidentiality. It's confidentiality, data integrity, authentication, and non-repudiation. They are self-explanatory, even I think the screen is also showing how what it really means. So when this technology, uh, what do you call it, adopts these four grounded principles, there are few there's no means or there's no way whereby this can be can be decoded or decrypted or intercepted. So cryptography is perfect example for a very very strong security. It also goes in long way with 2FA, that is two-factor authentication. It's also a security means. So I can actually tell you vividly that cryptography is even more stronger than 2FA, because 2FA still requires a medium, which your phone or your email address or a Google authenticator, that is a what do you call it, a 2FA authenticating app. We have many of them. We have the Alti, we have I think we have Google Authenticator, so on and so forth. That's two I think I can remember now. So that's for cryptography. Now let's move diving into the history of Bitcoin. So this is where so many misconceptions have come in since 2008 that Bitcoin came in place. So 2008, Satoshi Nakamoto created Bitcoin. The project began way back as of 1979, but it was listed and made publicly known, and that is when the coin or the initial coin offering was being shared. It was started as of 2009, but the project has started far back since 1979. And I think 1979 was the period of development. But 2009, I think they got a final solution and a final project, and they pushed it out to the market. So 2010, after 2008, nothing happened. They kept on doing this process of coin offering. They kept on looking for investors or people who will come in and also buy those, exchange their assets, like exchange their money, exchange their gold, exchange their months, exchange their land, their cars, their houses, anything that is an asset was then exchanged for Bitcoin. That was as of 2008 2010. This is the process of creating liquidity for these assets in the trading market. So it started on and so on and so forth until 2010 that the project finally got a listing. And what it means by a project gets listed, that means the project has survived, has strived through a period of time, and now it has accumulated value and can be traded on. So before a project can be traded or can be listed, it must actually have accumulated value before it can be listed in any trading platform, before people now start coming in to trade those assets. So 2010, the first market took place. A guy named Laszlo bought two pizzas for 10,000 Bitcoin. Man, this is way, very, very expensive compared to the price of Bitcoin as of 2020. If this guy is still alive today as well as done time, definitely he should be alive. And he has to value these two pizza he bought for 10,000 Bitcoin, because as at now, as I'm speaking to you today, Bitcoin is worth 13,000 US dollars, and one BTC is worth 13,000 US dollars. And this is actually uh, a pizza that was bought for just 10,000 Bitcoin. Multiply 10,000 Bitcoin times, what do you call it, times 13,000 dollars. You're having over $130,000. So this guy actually ate pizzas that was worth 130,000 US dollars as of 2010. But he never knew. And then Bitcoin was even not even up to what Bitcoin was not even up to, it was not equivalent to $1. It was less, far way less than, it was at probably 0.0001 or so value compared to now that it has skyrocketed. And so then this guy bought a pizza for just 10,000 Bitcoin. I think he must have eaten the pizza then and forgotten it. But he will never forget as at now, because now that pizza he bought is worth 130,000 US dollars Saturday. 2011 Bitcoin equaled to $1. So after much, people started coming in and started exchanging their assets, their money, their fiat currencies, and so on and so forth. They started investing in it. So then the value in the trading platform equated to $1. So 2011. 2012, other currencies, which I actually explained from the introductory part, I said Bitcoin and altcoins. Altcoins are other cryptocurrencies, whereby Bitcoin is Bitcoin. So altcoins can be Litecoin, can be what do you call it, Ripple, that's SLP. It could be Ethereum. It could be Trans. It could be DAP. It could be. There are so many. What do you call it? Coins in the market. So every other coin apart from Bitcoin is categorized or generally known as altcoins. 2013 was the highest volatility of Bitcoin. And for any asset to be tradable in any trading platform, it must have volatility. If it doesn't have volatility, then it can't be traded. Just like your US dollars that is just $1 to $1. But on this, which is what do you call it? The volatility is actually talking about it's not being stable. It's having this proximity to move from a low extent to a high extent, or from a high extent to a low extent. So any of this way, it's always moving to and fro, to and fro. And this to and fro now gives traders the opportunity to invest and make money or lose money. So you either make money either of the ways. Unlike those days that it's always going up that you make money. But definitely I can tell you that you can make money when Bitcoin is rising and when Bitcoin is dropping. Any of the ways, it depends on what you're actually trading on, or it depends on your order on the market. So 2013 was the highest volatility that was experienced, but it dropped down by 80% in just 24 hours. 2014, one BTC equaled to as high as, so after the volatility in 2013, by 2014, it's also kept going up again, and it went up again and got as high as 310. 2015, Ethereum was created. Ethereum is actually an altcoin, as I mentioned. So Bitcoin still kept on maintaining this high of 310, 308 downwards, and so it kept on going up and did not surpass this 310.